Hey, Sean, and you didn't talk about the stuff we wanted to talk about. But anyway, we'll get to that in a moment. Thank you. Interesting that you spotted Meta, or you used Meta as an example. Now, that's in the business portfolio. Last night, Stafford said the same thing for different reasons. If we sell it out, and we will, it was not a, that portfolio is a model portfolio, so people can then have an insight into things to do their homework on. You've done the homework, Stafford's done the homework, Meta's gone, history. What should we replace it with?
Well, I mean, I can tell you about a few stocks we've got in the portfolio.
We want one.
Okay, let me tell you about one, but I don't know if this is going to go down well with everybody. Presumably most of you have watched The Big Short. And The Big Short, fantastic movie, and one of the guys there is Michael Burry, and he likes to pore through documents. I mean, I'm happy with financial statements. I'm not sure I could go with mortgage-backed securities. Probably a bit too boring for me. But Michael Burry also plays drums. Okay, and but a lot better than me. He's got probably a bigger bank. I'm sure he's got a big bank balance than me. But he sold every single company that he had in his portfolio the other day, except one, and it's a prison company. Okay, and we've got a prison company in our top 10. Okay, and this company, you might go, what on earth do you want to own a company that owns and manages 43 prisons for? And I say, well, it's like a hotel business where I've got long-term guests. I don't have to give away 25% of my money to Booking.com, and I don't have to wash the laundry every day, And people go, but aren't you taking advantage of incarcerated bad people? And I go, well, then you mustn't buy hospital groups, because then apparently you're taking advantage of sick people. But if you think about it, you've got annuity income, it's recession-proof, and so why is the company mispriced? Well, the company's mispriced because it was a REIT. And as a real estate investment trust, you have to pay out 90% of your income as dividends. But banks were stepping back from lending to CoreCivic and this industry because they were worried it wasn't looking good for their ESG purposes, in the same way as they were stepping back from oil companies. And so this company is like, they've got debt, and the debt rolls, and they needed to make sure that they can fund the debt. And so they decided, well, we better convert from a REIT to a company. But as soon as you convert from a REIT, it's a problem, because all your shareholders own it because it's a REIT. So shareholders had to sell. And so they've been selling this company down, and the market cap has collapsed, but cash flow hasn't really changed. And then management said, well, look, we think this thing's just ridiculously valued. We're going to get a new facility in place, which they've done. And once we've done that, we're going to start buying back shares. So they announced in mid-May that they were going to do a 10% share buyback. And I thought, fantastic, because now we're in a tough market. If nobody wants to, look at what's happened now. Because the problem is, in a weak market, everybody sells what they own. And if everybody owns the same stuff, it's a problem. But nobody owns CoreCivic. There's only 2 analysts who follow it. So, and if they do try and sell it, well, fine, I got a bidder. So they, and then they sold so that's been going on. They sold a prison the other day, one of their 43, to the state of Georgia, and they sold it for $130 million. I'm going, well, hang on, that's one prison out of 43, and the market cap's only 1.1 billion. And they said, well, if we sold this prison, we sold it at a value of $66,000 per bed. And if we value all our beds across the portfolio at $66,000, we get a value of the company of 4.7 billion, not 1.2 or whatever, or 1.1. So I thought, but that's the state of Georgia. It's one prison, they're not going to be the same. It's probably not a fair number. On the conference call, what they said is somebody asked, is that a fair price? And they said, well, we think it's a really fair price, because if you wanted to build a prison today, you'd be paying more than $100,000 per bed, because of the cost of steel and cement, and prisons use a lot of that stuff. So I look at this CoreCivic and I think it's a great stock, because if the paw hits the fan, I've got good cash flow, I'm buying back stock, and then what they did is they increased their buyback. It's recession-proof. If the Republicans get in, there's probably going to get tougher on crime. And I've got the asymmetric thing where I haven't got a lot of downside, I don't think, and I've got quite a lot of upside. So there we go. So if it's
CoreCivic,
CXW is the ticker symbol in the US.
CXW, right?
Yeah.
Great. Okay. Now, what about crypto?
Oh, I don't know about crypto. You need to chat to Stafford and Charles about crypto. That's just not my thing.
So you're not taking insurance. Piet Viljoen says you should take insurance.
Well, and he's a smart guy, so maybe I should listen to him. But I've got my
Not
hands
your
full
game.
at the moment, Alec.
Not your game. Sean, just explain to us a little bit of the background about why a money manager who has his hands full should actually put themselves out there by investigating other money managers who are ripping off the public because there's no polite way of doing it. Why are you whistleblowing on this?
Well, as I explained in our first chat, it came upon, I happened upon this. We're a small fund because we run a highly regulated fund. The fixed costs of having auditors and lawyers and all of that sort of good stuff is quite high. So I've been wandering around town and people say, you're expensive. And it's 1.4% is the TER at the moment. And I thought, okay, well, yeah, I'm expensive because I know what they charge internationally. But I'd never really paid too much attention as to how much the funds are charging here. And when this friend of mine who's an entrepreneur said he wanted to put some money in the fund, I said, fine, chat to your IFA, but do you want me to do a comparison of our fund versus any funds you've got? And he goes, yeah. And he gave me the name, which is a fund of funds. And in the fund of funds was the Coronation Balanced Plus and Alan Gray Balanced Fund and 91 Opportunity Fund. And I looked at those things and I thought, well, hang on, why is this fund, it's materially underperformed us. And these guys should have done well because they had NASPERS in the portfolio, you would have thought, and they've had, they've got all these asset allocation tools they could have had. And I thought, well, somebody's got to say something about this. And it's tricky for me because I've got a lot of good friends at those organizations, but I'm married to a doctor, and she saves lives, and I move numbers around a spreadsheet. And so I feel like, well, what's my social contribution other than looking after her so she can do the thing? And that's what it is. And so I just feel that my sole existence can't be just trying to make rich people richer. And I'm looking at the average person is putting money in these things, and they need to know. And I'm going, well, and anyway, those funds are more expensive than my fund. So that's the part that really got me irritated. And that's probably why Keeson thinks I'm an angry guy, which I'm not. So Alec, it was hard for me, and I knew that, we're on the Alan Gray platform, and we're on the 91 platform, and we've got, some of the guys in the office were like, but Sean, we've got some clients from some of these organizations. And I said, well, then they can redeem, but we're going to do what's right.
Okay, so you've done that. What do you think about broader society? Because broader society it's riddled with vested interests and conflicts of interests. And
I think if broader society in terms of?
Well, put it differently. In your industry now, you're saying we've got these, we're on these platforms. They could easily kick us off.
Yeah.
And that might affect
happen.
our business. The norm is not to think like that. The norm is to say, oh shit, let's not say anything about my industry. Let's not say anything about so-and-so because they might cancel their advertising. And my industry is one of many that operates in the same way. Let's not criticize the ANC as big business because they might not give us a contract next time round. Those go to the core of one's perhaps humanity, of the way one looks at life. What do you think about that in greater society?
Yeah, I think you've got to do what's right, regardless of the costs. I really do. And I think if more people did what they felt was right, regardless of the consequences, then the world would probably be a better place. And so I'm going to do that. I felt like look, my skills are looking at income statements and balance sheets and trying to figure this stuff out. And so now I'm just applying those skills to fact sheets and going, but hang on, look at this disclosure of, and is it malpractice? I don't think it's missold. I think in the UK we had this PPI, this insurance product, and it was missold. And I look at some of the disclosure of these performance fees, and I go, do people know that? Do they know about this daily crystallization? Do they understand all of the stuff? And so that's really what I wanted to expose. Like, if they know about it and they're happy to pay it, if they're paying performance fees and they're getting amazing performance, that's fine. But they need to know about it. And if it's being concealed, and I think Charles raised a very good point, that there's an intermediary before you. And also remember that the rand over time has typically been weaker, and these guys have got some money offshore. And so that rand weakness shields you from the truth, because if the rand actually strengthened, well, now all of a sudden you pay a close attention. Why are my returns so low? So, Alec, it just comes back to, I think we must just do the right thing. And I'm going to do it. And if everybody takes their money out the fund, well, then I'll Maybe then I'll become the financial journalist other people are talking about. But hopefully not, and hopefully we can go on and do good stuff.
Why is it that those performance fees are charged in South Africa? And as you so well pointed out in your presentation that we published, even 9 years ago in the UK, there's no way that anyone would have got away with it.
Yeah, look, I think the thing is, what's key here is that the performance fees charged to retail investors. If you're a sophisticated investor and you're used to investing in hedge funds and you understand there's a lifetime high watermark and the crystallization period's not daily, then that's fine. Then you're aware of the risks and you're of the mechanism. And so I don't have a problem with professional investors paying performance fees. The problem I have...
But do they?
What? I know they do. So, hedge funds and private equity and all the rest, that's fine. But it's the retail investors, because that's where the complication comes in that these are highly complex formulas and structures, and especially, and then you've got performance fees against a weak benchmark. I mean, that's the problem that I have. And then I don't even know how you calculate that benchmark, because, if you and I are the only peers in the benchmark, I need to work out my number, my NAV, and to do that I need to know my performance fee, but I need to know how you've done. And you need to know how I've done. So it's like, so maybe there's a data lag, as Dave rightly pointed out. But why have we got these soft benchmarks, and why are they so different for everybody, and what's going on? And that's what I want, and I think, and these are billions of rands that should be in savers' hands. That should be in savers' hands. And those savers can then do good stuff with it. They shouldn't be sent off to, fund managers, tax havens, or whatever.
Magnus Haystack celebrated your piece. He says he's been beating this drum for a long time. He's doing okay.
Yeah.
Brent Hurst is now, I think, the top boutique financial advisory in South Africa. So Magnus he's rowed his canoe and it's been fine, and I hope it's the same thing for you. But I recall going to press conferences after Berkshire Hathaway AGMs where Warren Buffett continued on this theme, on the cost theme, for a long, long time. And he said, but I'm wasting my breath, literally. He said, I'm wasting my breath with you, the 30 or so media people, because your proprietors will not allow you to write these kind of stories because of the vested interests that exist there. Is that part of the problem, do you think, that the status quo is so well entrenched, and that the muscle of those who benefit from it is so large that smaller funds don't even get in?
Well, Alec, if that is the case, and I think it probably is, I think they're being short-sighted, because let me tell you what I think what I'd love, okay? I would love money to leave those big institutions, and I would love that money to make its way into smaller fund managers, to the Counterpoints and the 361s and the Batteliers and all these funds, the smaller funds, who can buy the small caps and mid caps that are at knockdown prices. And when they buy those small caps and mid caps and the prices rise and the performance is better than the companies, the big funds that own, who are now bleeding assets, then, that's going to lower the cost of capital for the smaller companies. And that is going to rejuvenate the interest in small companies. And then those companies are going to be getting access to finance at a cheaper rate and stimulate economic growth. I mean, if you look at Norway, you've got all these wind farm companies that are all listed on the Norwegian stock exchange, okay? Why haven't we not got solar companies listed, like lots of them, and wind companies, and, unleash the power, man, from the small guys. But to do that, you've got to lower the cost of capital. I mean, right now, all these companies are getting bought out by MBOs and taken private and all the rest, and that's just boring. And so, people can decide, do we want to give money to the big guys for them to buy a few more British American tobaccos? Do we want to give money to Counterpoint, and they can go find these small undervalued companies, lower the cost of capital, and drive economic growth? So that's what I really hope happens.
Is that really your agenda?
Yeah, I mean, as I say, I can muddle along. I'm earning a fine salary. If I hang around at $60 million, well, it's not the end of the world, to be honest. I mean, some of my peers might get a little bit frustrated, but my kids have finished school. So, I mean, hopefully that's not going to happen, but I'd like to make a contribution, and I can't take all the money.
So your family live in the UK.
Yeah.
What would have to happen here? And you saw a bit of politics. You heard Paul O'Sullivan's
Yeah.
rather gloomy, I thought, outlook. R.W. Johnson, incredible focus and insights, very honest, not exciting or not hopeful, but very honest. And then you had the hope from Kim van Ketz and certainly Chris Pappas's. If we could clone him, I think South Africa would be screaming ahead.
Amazing.
And also Ethel Trollip had some very, very uplifting things. What would have to happen here for the Peches to say, okay, we're bringing our skills back?
Yeah, I mean, look, I'm going to be traveling back regularly anyway, but I know what you mean, and we've got a place outside Cape Town. I think if people felt safe in their homes and safe on the roads, you wouldn't see the people leaving, because entrepreneurs, we could create jobs. And you go, well, how do we feel safe on the roads? Well, in the UK, if your car is older than 3 years, you have to have it MOT'd, roadworthied. Here, you don't have to. So you got these skadonks driving around with wheels falling off. Now just think about it. If we had every car after 3 years had to be roadworthy every year, okay? Well, that would be great for the mechanics businesses and the tires, and the roads would be safer. You wouldn't have wheels falling off and driving across and wiping out a whole lot of people. And if the roads were safer, insurance would be cheaper. And it's a simple thing. I mean, who's the loser? No one's the loser. So now we're safe in our roads. Great. Well, now let's just solve being safe at home. Well, if we're driving economic growth, well then hopefully there's more jobs and we can be safe at home. I mean, I did that thing back in Feb with Justin, and I did a talk about Naspers. And that was also, Kusen probably watched that one too. That's probably, and I was getting really frustrated because I was looking at this value unlock that, said they're putting South African savers, like worked out 225 billion rand discount. And I said, why doesn't Naspers learn from Tencent? Tencent's a venture capital company. It's not a gaming company, it's venture capital. And they buy these little businesses, and then they help them, and they nurture them, and then they list them on the Hong Kong Stock Exchange or New York or whatever, and then they drive value. Well, why doesn't Naspers sell some of their Tencent shares and start an incubator of venture capital here in South Africa, and invest in solar? I mean, we've got the wind. If you drew a wind map of the UK, which I did, it's no windier there than here, and we've got wind farms all over the shop there. Okay, and they've got more sun here. We've got more sun here, and so now you're driving the growth. I mean, just think about something like the railway lines. Thungela, right now. Coal prices through the roof because we don't have energy in Europe, and the railway line is not functioning properly because people are stealing copper. And if we could actually, if that could get solved, well, they could export more coal at the current high prices, which would strengthen the rand, which would lower the cost of fuel. All these things. So these little things we got to do. But anyway, so Naspers, at least they've started unlocking some value and selling shares, which I wanted them to do. But now they must take it to the next step and create a venture capital fund. I mean, there's billions of rands out there.
I think they got one.
Well, it's definitely not doing the right stuff.
Okay. There's one in I think it's
where,
called the
Alex?
Foundry. It's in the
here?
Cape. Yeah, in South Africa,
Okay,
yeah.
well, let's make more.
I know you do like to read.
Yeah,
Have you had a look at our exclusive books shop?
I have.
What books there can you recommend? What
well,
books
I
there
bought-
do you own already?
Well, I've got The Intelligent Investor, and that Phil Fisher, that cover's familiar. I'm sure I've got that on my bookshelf, but I haven't read it for a while, so I thought I'd better buy another copy just in case. I haven't got it. Yeah, I think there's one book, Value Investing by James Montier, is good. I'd recommend that.
That's not there.
That's not there, unfortunately, no. And I should have recommended it. And there's another book I'm reading at the moment by... I'll get the name. Sorry,
It's so interesting when we talk about books, and I'm going to ask both Sai and Pitt to give me their thoughts on this. But Warren Buffett, at that age, after the annual general meeting, it's actually quite an extraordinary experience. I went to the first one in 2005 and went to a number thereafter. And you get between 30 and 40,000 people coming to a basketball hall, and you have to literally queue outside to get a decent seat. And sometimes, if you don't queue early enough, when you get in there, you get into a room where they have a video screen on. So you can't even get into this basketball court that holds 30,000 people. And that was something that I went to every year. But the reason for that was to just it's like getting a reboot of capitalism, how capitalism is supposed to work and why it works the way that it does. But consistently every year he spoke about reading. He spoke about picking up books, reading books, and at one of those press conferences, he stopped them when he turned 80, and he's now 93, I think. So it's a long time ago. I managed to sidle up to the desk where he and Charlie sat, because there were only 30 people who got tickets to get in there. It was on the Sunday as well, after the AGM. And I said to him, Mr. Buffett, no, I didn't. Everyone calls him Warren. I said, Warren, I mean, it's a little presumptuous, but you do. How many books do you read? How many books would you read in a month? He said, no, I've slowed down a lot. I only read 2 a day. That's when he was 80.
Wow.
How many books do you read?
How many? Well, I'll tell you what, I'm really good at starting books. Alec, I don't read anything like that. And many of these books say the same stuff. What I'm getting better at, so I probably buy maybe 2 books a month, maybe. Okay. And I get ideas for what I want to read from podcasts. And the podcasts, if I said to Dave and Anthony yesterday when we were on our walk, I said it's quite rare for me not to be on a walk listening to a podcast. And I love that. And so I do that regularly while I'm mowing the lawn. We have to mow our own lawns in London and listen to podcasts. It doesn't take me the whole podcast to mow the lawn, put it that way. So I really like that. And I'd encourage people to look at podcasts and things like Meb Faber. It's very good. And he interviews a fund manager or whatever. And you go, I like what this guy says. I'm going to go and find a podcast about it. And so I sometimes share those on LinkedIn and Twitter. I've enjoyed this podcast, and then they might mention a book in that podcast, and then I'll go and find it.
Oh, it's interesting, isn't it? That we have very old media in books that are still as valuable as ever. There's a wonderful, wonderful book called How to Read a Book. It was written in the 1930s and taught me everything, because used to be a little bit like you. I'd pick up a book, read maybe the first 20%, and usually as an author, I've done this, you put the best you got for the first 20%, and then it's not quite as good because the publisher wants you to fill the book. And often we lose interest after the first 20%. But How to Read a Book, I can't remember the guy's name, but it's a fantastic, and well known, if you Google it. He explains that you start off in a certain way. It's scientific. And that our teachers who taught us how to read books at school were all wrong. That the way to begin it is to read first to read obviously the covers, then to read the contents, and then to read the intro, and then to spot where in the book you can get the most value from. Because it's very rare that 100% of the book is going to be worth 100% of the value. Yeah. It's very rare. There are some, Snowball there, Alice Schroeder, 100%. Start at the beginning, finish at the end. But many of the other books, if you dip in, you can, and I'm sure that's what Buffett does. I'm sure he doesn't sit there reading 2 books every night. It just is a discipline that's helped me a heck of a lot in consuming more really valuable stuff. Okay, we're ready for questions for Sean. Any hands yet? There's a hand on that side. There's a hand there. I see Clive is delegating to Joseph now. Danita, are you that side of the room? This side's very quiet, Danita. Nobody wants to ask questions. There are a couple on this side. 3 on this side. Yep. Adrian.
Hi, Sean, thanks. And as you said, a wonderful day yesterday. And what really intrigued me, and I don't think we brought it up with you, but in being in the wildlife and conservation business, we started a fund called the Community Conservation Fund Africa. Now, we are great believers that if you don't involve the community in wildlife, we will lose.
Adrian, question, please.
We will lose the biggest asset we've got.
Adrian,
my
sorry.
question is, I had to explain that, as rude as you are, Alec, and I respect that, but
I know you too well, Adrian. I'll give you a microphone.
But my question is this. If you're going to donate to a conservation effort or whatever in South Africa. When you make that donation, do you get the tax certificate in London, and are you able then to send that money out with the benefit of a tax certificate?
Adrian, that's a very good question. So, and I mean, listen, this is only a couple of weeks old, this idea of mine, and we've got to do it once we get to $200 million. So hopefully, it's not going to be too long. But my idea is to set up a UK charity so that we don't have to pay tax on that donation, and then that UK charity, then that can send the money out to South Africa in the best, most efficient way, so that it gets to the end point. And if clients want money donated to conservation, then we're going to do that. But I should chat to you about that tax certificate, because it's probably not something that I know a lot about, and but I definitely want to do it in the most efficient way.
But you know Jeff Johnson, a South African who calls the UK, probably Surrey, the 10th province of South Africa, and he runs the Golf Day, which you guys put a lot of money into, and there's no doubt. Jeff told me that all of those charities bring the money back to South Africa, and there's no doubt, knowing Jeff, that the charities who make the contribution do get a tax certificate for it. So there's definitely a way, for sure.
Yeah,
for sure there's a way.
Let's chat about that. I don't know what that tax certificate here in South Africa does, but if it helps, great.
Okay, next question over this side, Joe. Danita?
Hello, it's Rebecca Humphreys. I just have a question on value and growth investing. Yeah. On your slides, you showed that at the moment, anybody who was invested in growth should probably be turning to value investing. And my question is, where does one find a fund that, because they all tend to be either growth or value, where does one find a fund where the fund manager will actually switch from growth investing to value investing?
Well, that's interesting. I mean,
that's a brilliant question.
That is a brilliant question. And you'll notice that we're the Ranmore Global Equity Fund. We're not the Ranmore Global Equity Value Fund. Because at the end of the day, we all want, the best companies are growing companies. Share prices follow earnings. Shares don't go up because they're cheap. They go up because earnings are growing or whatever. But I don't want to pay a crazy price for that growth. I mean, listening to Stafford last night, I mean, he's in the industry and he's saying, whew, some of these guys are in trouble. And you can see that. And so if you're paying 30 times earnings, it means that if their company earns that and pays all of that out a year, it's going to take you 30 years to get to recoup your investment. Well, that's crazy. There's no ways I'm going to, who knows what's going to happen in 30 years' time. Now, I know that's theoretical. But I think you just got to find a fund manager who doesn't want to pay too much for growth, because we want growth, but you just don't want to pay too much for it. And right now, SocGen, they're telling me they're growing, and all these other companies. Is Core Civic really growing? Well, they're going to grow earnings per share if they keep buying back their shares, and that's what you want. But a lot of fund managers kind of paint themselves into a box, and maybe I painted myself into a box by saying, oh, I'm high quality, and I'll pay any price for high quality. And my answer is, yeah, but a BMW is a great car, but I don't want to pay 3 million rand for a BMW. That's not a good deal. I'd rather go second-hand, BMW that's just left the showroom, and somebody else has taken the 20% hit. So I still want a BMW. I just don't want to buy it in the middle of summer. I'll go and buy. If I want to buy a car, buy it just before quarter end, when you know that the sales agents are probably running behind on budget, and they will cut you a deal to get that done. And so you're just getting the same thing at a better price.
Do you buy stocks on a Friday?
Do I buy stocks on a Friday? I mean, I've never ever thought about that. It depends. Depends what price they are.
I've been watching the US markets now for the first time very closely. And it's interesting. I haven't done the analysis yet, and I will do it soon. But the best time to buy stocks, it looks like, is on a Friday, because Fridays are generally soft days. Maybe those traders are offloading their stocks.
Well, what happens is you often find the traders don't want to hold, short-term traders don't want to hold positions over the weekend, because accidents can happen over the weekend. You wake up on Monday and you find that Ukraine's been invaded or whatever, and now you're staring a big gap in the face. So often you will find that people will try and take their profits on a Friday,
just an interesting point on that. Joe?
Thanks, Sean. Thanks for highlighting a lot of odd things that go in our industry. I'm just curious on your thoughts. You mentioned Warren Buffett. I mean, Warren Buffett became Warren Buffett because in his early partnerships, he had a 25% share fee over 6% in a dollar return, and he took 25% of any return he made. And from 1950 to 1968 or something like that, that's how Warren accumulated so much value to buy Berkshire. His first clients were retail investors. They were doctors, his family, etc., etc. I mean, Alec, you talk also a lot about Warren Buffett, but that kind of scheme, that kind of stuff that you're highlighting, it's how he came to be. What are your thoughts on that?
On what, the retail side?
On how Warren Buffett had performance fees, he had a low rate.
But he gave. It's a big. He had partnerships. He wasn't selling retail funds. He had partnerships with people he knew. He wasn't selling retail funds. He didn't have an army of marketers who were going out there selling the product. He was engaging directly with individuals, with people. It's a very, very, very different model. If you and I, or Sean, if I say to Sean, okay, forget Ranmore, here's R1 million, you manage that R1 million for me, I have an expectation of 10% a year. Anything over 10% you make, I want to incentivize you appropriately. That's what Buffett did. That's exactly how he started off. He was never a retail fund manager, ever. He had private individuals who actually gave him money. There isn't an asset management company called Buffett Incorporated or Berkshire Hathaway Incorporated. I think they're very different. These are marketing machines. These are marketing machines. These are not individual. Piet Viljoen is probably the closest we get to Warren Buffett here. Does he charge performance fees?
And I think the other thing is
Sean, does Piet
No, he doesn't charge performance fees. Sorry, I don't know. I mean, the other thing is you could look at performance fees. You know, if I do a good job for our clients, I mean, I couldn't work more hours in the day. So any idea that I'm going to earn more and that's going to incentivize me to work harder is just not true. Okay, but if I do a good job for clients and the assets grow and Morningstar have just given our fund a gold star rating the last couple of days, then I'm going to gather assets and I'm going to earn fees on that, and that's my performance fees. You know, but at least my clients know how the thing's calculated. You know, there's 1,300 funds. I couldn't believe it. There's 1,300 funds here in South Africa, and if a big chunk of them are charging performance fees, and some is against this benchmark, and some is this sharing ratio, and some is on gross, and some are on net, how on earth did people manage to get their minds around it? And look, not all performance fees are bad. There's some that are worse than others. And if you're in private equity where it's start to finish, we buy, put the money in, we build these investments, and when we sell and crystallize, well, then you get a chunk of the action. That's fine. But this idea of taking performance fees on a daily basis and then the market falls and we're not giving it back, I think that's a problem, and I don't think retail investors understand that. And I think this performance fee thing on feeder funds, I mean, how on earth does that happen? And did clients know that? Was that disclosed that they, in a feeder fund, could pay a performance fee, and if anybody investing directly in the UK fund didn't pay performance fees? Is that disclosed anywhere? If it's disclosed everywhere, fine. But if it's not, it's a problem. And that's what I'd say to that.
But it's a good. Thanks for raising that, because it is a very, very important subject. And the more that Sean talks about things like performance fees, the more we think about it, and the more we do test our theories, and eventually the better deal everyone's going to get. So thank you.
Sean, thanks for that. Sean, you've got a global fund, you're a value investor, you're a small firm. There are thousands of companies out there. Can you just take us through your process of how you filter down companies of value so you can, I mean, you're a bottom-up investor, that must take, I mean, how do you get it down to a manageable amount of companies for you to assess to put in your fund?
Yeah, I think that's a good question, and that's often a misconception. You know, there's 4 of us on the research side, and people go, how on earth can 4 people know all these companies around the world? And the answer is, I don't need to know all of the companies around the world. I just need to find a few good ideas a year and avoid disasters. And it's a bit like, does the Springbok rugby coach, does he know every single rugby player in the country? No. He just knows that I want my forwards to look like this and my backs to be able to run this fast, and then, the guys people who fit that description then he gets to know them. And so that's what we do. So we have a filtering process, and the filtering process is not one magic screen, and it's a bit, I guess it's a bit like a recipe book, so I'm not going to share all my secret recipes, but we have this filtering mechanism, and that'll include things like free cash flow yield, and return on assets using free cash flow, and what's been that. But then, the problem is with each one of these, there's always an obstacle. So you could say, well, I'm looking for high return on assets. Yeah, but over what period? Because if you go high return on assets over the last year, there'll be coal companies at the top, but those are super profits, so you can't bet on that. And if you say, well, it's return on equities, okay, well, but the problem is, what about these companies that have bought back lots of stock? They've done a lot of big share buybacks, and they've taken then equity negative. And so those companies won't fit in on that screen. So there are a few different screens that we look at. But, and do I know that I'm going to find the best companies? I'm going to find, all I need to do, find a few good ideas a year and avoid disasters. And if I can find that asymmetry, where like the prison company, I mean, they're not all going to be like that, but if I'm buying a Renault, and I go, well, if they need cash, if Renault get in a sticky position, what are they going to do? They're going to sell some Nissan shares. At least they can raise some cash that way. If I'm buying a European bank, those guys have got excess capital now because they haven't been able to pay out big dividends until recently because the European Central Bank wouldn't let them. And so I'm going, well, I've got these well-capitalized banks. I mean, Ireland. All these tech profits from Apple and Amazon and all the rest, where's that? Well, they're paying tax. Who they're paying tax to? Ireland. Now you've got Ireland is the only English-speaking country left in the EU. So anybody wants to set up an office, what are they going to do? They're going to set up an island. So what do you think the Irish banks are? Not too bad. The country's pretty fiscally, because they've got all these tax revenue coming in from the COVID profits from these tech companies. Anybody who wants to get exposure to European Union there, I can go buy an Irish bank on 35 cents in the dollar. They're not going to go bust. So I've got asymmetry, and interest rates are rising. So that's what I'm trying to do. Just find a few good ideas, and hope that
And hence you read a lot to find your new ideas.
No, I read conference call transcripts and things like that a lot. And I read. That's why I don't have too much time for books. But
we have time for a last
more
question
questions?
before lunch. No?
Hi.
oh,
Sean, just a quick question. Linda here. I believe Andrew Lapping has joined your business, Ranmore. He was obviously quite integrally involved for a long time in the managing of the Alan Gray funds that you mentioned. So just interested to hear how he would justify that and be on the other side of the fence in your business now. Just interested.
no, I think that's a good question. And I mean, Andrew Lapping and I go back a long way. When I worked at Orbis in the early 2000s, I met Andrew, and we get on fabulously well. And he's had money in our fund for a long time. And what happened is, when Andrew left and left South Africa, resigned from Alan Gray Limited, where he was the chief investment officer. And he was overseas, and he spent I think he'd been over for a year and a bit, and we talk regularly. And I said to him, Andrew, why don't we set up a separate fund for you, and you can come and join us? And we sort of kicked it around, and then he thought, there's stuff that I enjoyed, working in a team, doing the models, intellectually, being stimulated intellectually, and then there's stuff I don't enjoy. And so I don't want to set up a separate fund, because then I've got to do the stuff I don't enjoy. So I'll just join you guys. So, these are my views. I mean, the nice thing is, I'm the largest shareholder in the business, and so I'm going to say what I say. And, I understand that's probably made it a bit tricky for Andrew. If you look at it, he has never publicly justified performance fees. Okay, if you look at any of his writings and that, and he feels strongly about it too. Okay, so he's never, and he's a top guy. And I know that Marilyn knows that if I, fall off my perch tomorrow, then Andrew must look after our money, because he's a top guy. And it's going fabulously well. We're thoroughly enjoying working with one another. It's been almost a year now, and hopefully it's going to last for a long time.
That's a huge feather in your cap, to have the former chief investment officer at Alan Gray, which is I think the biggest in South Africa, come and join you, pick you. Is it a relationship that clearly goes back 20 years, but it must have perhaps a culture or a principles that you both subscribe to, values that you subscribe to.
Yeah, we sing from the same song sheet. And I mean, we did a webinar recently, and Andrew said that when he left and went internationally, he just wanted to, why has he given us some money to manage previously? Because he wants the fund manager not to worry about the benchmark, to just forget the benchmark. If the benchmark is 40% in tech stocks, and we don't think tech stocks are cheap, why do you want to have 35% in tech stocks and think you're doing a good stuff? He just wants people to, he wants money to be managed like he would, as a private investor. And yeah, I mean, listen, friends of mine said, gee, that's a coup of the year. And I know, I'm just glad I thought about the idea, because they didn't let that one get away. But we sing from the same song sheet, we're in the same place, and we get on fabulously well. But he knows that, I said to him, look, you're lucky, because I said, look, I'm going to stay the portfolio manager, because I've been in a situation before where I've lost control of that. And you can't have two skippers on a boat. And so I said, you're perfect, Andrew, because you're in the perfect position, because you've got a free option here. If things really start going well, it's because you joined us. And if things go badly, it's because I was at the tiller. So yeah.
All right, one last question.
Hi, Sean. I just wanted to get a sense from you, because I don't think
Is that Vusi?
Yeah, hi, Alec.
How's it? Nice to see you, man.
Yeah, cheers. I thought I'd introduce a nice.
Do you know you're on the cabinet? Rob Hersoff's cabinet.
I heard it this morning, the bastard. I heard him. A great conference, by the way. It's like I was saying to Rob this morning, it's like a Davos in the Drakensberg. Sean, I wanted to get a sense from you. The JSE has launched a platform, it looks like, to enable capital to flow into SMEs. It's a big problem we've had in South Africa July last year. You would have seen some of the riots. Those of us who no longer live here watched it via the telly. I wanted to get a sense from you, knowing what's happening in other markets, and for everybody in this room who's a saver and an investor, how can we meaningfully get some of our savings to get into real businesses in the real economy, creating real jobs? I mean, the pie chart's great, and it's fantastic to get capital growth and allocation. But what could we do to get money to flow into the real economy? I'd just love to get a Greenfields view from you.
Well, I mean, if you've got a market which has got an appetite for the listing of small businesses, then that's a good place to start. And how do you do that? Well, you get that part of the market going, and giving money to the big fund managers who are not going to be interested in buying those shares is not a great way to do that, I would argue. And I also want to say, obviously this country, South Africa's got problems. Hey, listen, I'm in the UK. We've got a choice of Liz Truss right now, or Rishi Sunak. Our energy prices have gone up 5-fold, from 12p per kilowatt hour to 60. There are more food banks than post offices. So it's not like it's roses offshore. Look at what's going on in the US. I mean, somebody said to me a few years ago, an advisor who deals with a UK client, and she's American, and she said, you know what the big worry is in the States? This is in 2008. And I said, what? She says, it's a recession in a country where everybody has guns. Okay? And that's quite a frightening thought. And so, I think every country out there's got challenges. But we've got the energy, we've got the entrepreneurship, and it's far more entrepreneurial. Yeah, it's a very entrepreneurial country, because we've had to be entrepreneurial. And so if money, I don't know if I've answered your question there, Vusi, but if we can inject life into that segment of the market, and the small caps and the mid caps, and that's a great start, because then the small caps will go and acquire these other companies, and they've got access to capital, and off they go.